Hello traders and welcome to another video review. Today is Thursday, 20th of May 2021. Let's take a look at the Forex calendar to see what is going on here. And some key important data had been published already overnight from Australia this time. We got the unemployment rate, which was better than expected, 5.7 dropped to 5.5. Employment change, which was better than expected, 77,000 dropped to minus 30,000. Part-time employment change wasn't expected, as you can see here, and the participation rate is now 66%. Of course, we got another data, consumer inflation expectation, which is kind of rising to 3.5% from 3.2%. So bunch of data from Australia, very interesting. We will definitely take a look on the Australian dollar later on. So London session, what do we have here? Well, not much. Some data from the Germany producer price index had been published in line with the expectations, and 9 o'clock there is a scheduled current account data from the Eurozone. During the New York session, we have some data from Canada and USA. From Canada, 1:30, there's a scheduled data of the ADP Non-Farm Employment change and new housing price index. Later on, we got the speech from Bank of Canada Governor Fifth McLean to he will be speaking on some kind of a conference, and at 4 o'clock as well we'll have the financial system review. From the US, we got the scheduled data waiting for release at 1:30 in form of the unemployment claims, continuing claims, and Philadelphia Fed manufacturing index. So not that much important data, but overall very interesting. So we will take a look at the Australian dollar, Canadian dollar, and the other currencies. Australian dollar, let's start with the daily time frame chart. What do we have here? We are still inside of the channel. However, recently we might consider this yesterday's candle as a breakout to the downside, but hey, we got this one a couple of days before. So even if today we are bouncing towards the lower channel line here around 7,760 pips, we cannot still rule out that we will get back to this channel. Only clear rejection of this level in form of the pin bar candlestick or any kind of a red down candle would assure us that we are out of the channel and trading towards 7,680, which is the next technical support for the Aussie dollar. So this move here is more like a sideways move, despite the fact that it's steadily jumping up. But as you can see, as long as we are trading below the range of this candle, which is a shooting star and with a high at 7,892, we cannot say that the Australian dollar is going to test the 8,008 pips mark, which was made at 25th of the February. So far not much really going on here. Please keep an eye on the breakout to the downside. US dollar to the Canadian dollar. What do we have here? Well, very interesting thing. We have a first like a breakout after the pin bar candle was made into the key support of 1.20. The lows was made at 1.2011, so not that far from the 1.20. Now we have a breakout out of this short-term channel. Well, we need to continue going up towards the level of 1.22 and then 1.2244. This is the key short-term technical resistance. I'm moving my blue arrow here, and of course please notice the extremely overbought market conditions during the move below 1.22 to 1.20. So those 200 pips might be easily recovered during the bounce from the oversold market conditions. So please keep an eye on the US dollar to the Canadian dollar. Of course, we need a breakout above 1.2244 in order to hit the other technical resistance levels, but this level 1.20 is the key long-term technical support. If we break below this level again in the near time, then of course, well, the situation will be even worse for the US dollar, which is being of course sold, and the Canadian dollar is being bought back up. So if we are talking about the US dollar, let's just take a look at the US dollar index to see what is going on there. So as expected, the wave C is being still in progress. We are developing our wave C to the downside. Right now the target is still at the level of, let me just zoom out a little bit, the target is still at the level of the lows from the beginning of this year, 6th of the January. The low is 89.18, so there is a still pretty good chance that we will hit this level, and so far so good. We are trading in match with the according to the scenario. Let me just move this channel here to see what is going on today. There you go, we got the updated channel. Something like this would be, I guess, would be enough. Right now price is still inside of the channel. We are waiting for the level of 89.15 to be hit in the nearest future, and then we will see what is, of course, the next target for the US dollar. So far it's starting to look more and more like an impulsive wave progression to the downside, and as you can see, the RSI is below level of a 50, so it's still under the control of a supply side of bears. Bears are in control of the market, so we can pretty much surely assume that this market will go way lower. The recent low 89.66, there's only like a 50 pips to the yearly lows on the US dollar. In order to rally, the market must break above the high of the wave B, which is 91.41. So that's the US dollar index. Let's take a look at Bitcoin, because the interesting things were going on yesterday. We have the wave C done. We have done the wave C, as you can see here, to the projected target level that I was talking about recently, the previous wave 4 area at 30,196. The low was made at 29,701. So this ABC correction has been completed. Right now it looks like the ABC, please notice, simple correction, right? Simple ABC correction has been completed. Let me just move my measurement of the percentage a little bit lower. 54% correction had been made. So right now we can get rid of the previous correction, because this is definitely the biggest one, and that means this is the top for the wave 5. So the wave 5 had been done. We have finished our cycle here, and now we are making a corrective decline in the wave ABC, right? ABC completed, and now we are bouncing. Of course, right now this zone will be the key technical support for the market, and it looks like those two levels here are now of course the technical resistance. So let's just change our colors. There you go. Resistance 41,893, 43,053. Without getting above this levels, we cannot talk about uptrend resumption. Please notice that this correction might evolve into more complex and time-consuming corrective pattern. It's only ABC pattern right now. Let's just observe how we will develop here, how we will try to break above the level of 40 43,000, how these levels will be played out. So far, this big pin bar tells us that there is a strong market reaction from the demand side around the level of 30,000. So we have the bulls have managed to push the price higher. It's almost for $10,000 they managed to push, or actually 8,000 and a half, let's say. So that's a very good result, and please notice that this level of 30,000 was the extremely oversold level as well, and now we are bouncing back up, but we need to bounce above 50 points on the RSI in order to resume the uptrend. That's the one scenario. The second scenario is the correction has not been completed yet because it's only ABC correction, and there might be, of course, another ABC correction in form of like a double zigzag or something like that. And this is a complex correction which may take time, and of course it will be much more tricky to analyze and to trade. So please keep an eye on the Bitcoin around the level of 43,000 for now. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. Bye bye.